Investors and traders, welcome to the channel Market Chart Pattern. In this segment, we will be taking a look at the key US technology stocks that we have been following for quite some time. This video is for educational purposes only, and it is not a financial advice. So guys, right from the start, apologies, this video might be a little bit longer than usual because this is just not a weekend review, it's also a month-end review. So we'll also try to look at the longer term charts, including the weekly charts and the monthly charts for the key US stocks that we follow in the technology sector. So we start with the daily chart of Apple. If you have been following our channel, you will know that we had a 56, roughly about 54 to $56 per share level as our target because of the 61.8% Fibonacci retracement that was achieved way back beginning of February this year, 2023. And what is happening now is that the market had actually gone into a consolidation after that. It broke out of it. It met our upper target of $165 per share level, which is the 78.6% Fibonacci retracement. Also, we had a 1.272 expansion around $167 per share level. And recently, what the stock has done after a brief kind of consolidation, it is moving in a channel formation. And in the last video which we had done, we had actually mentioned about this market symmetry, which we really like to look at in our analysis. And what is this market symmetry? So if you look at the previous moves when the Apple had moved, this is how much it had moved by. So here we go, nice one, perfect. And here we go, we are moving, we seem to be moving in that direction. Now I'm gonna move to the weekly chart. And last month I had done a video, we'll put a link on that, in which we had looked at the Apple stock and the Microsoft stock from a longer term perspective. And we do have a longer, on a weekly chart, a target of $171 to about $175 per share level. We'll just cover that in a moment. And in that, in fact, this ABCD kind of a pattern which is taking place on a daily chart here, we had discussed that. So let's just quickly take a look. There we go. Here we go. So that's why we mentioned this one. So we're gonna have a look at that on a weekly chart. So let's go to the weekly chart now. Here we go. So guys, this is the 1-to-1 projection ABCD that we were looking at. We have this 78.6% Fibonacci retracement coming from the highs way back achieved in the beginning of January 2022, so quite a while ago. And we have this ABCD formation. That's why we think that 171 to about roughly 175 $176 per share level is the kind of area we are targeting. From a momentum perspective, the stock looks good because the price is trading above the 20-week moving average and above the 200-week moving average. It's pretty strong. What is really important for this is, guys, here, if you look at this shaded region here, what the stock is doing is, in fact, since January of 2022, it's just been in a sideways trading range for so many weeks. And what is really key is, which we had covered in our longer term videos and also some of the weekend reviews done, this level of $128 per share level is really important. And the reason is because of the Fibonacci confluence levels which come here. Look, so many of them. In fact, this 38.2% retracement going back all the way to the beginning of 2019, so almost end of 31st of December 2018, which we'll have a look at on the monthly chart in a moment. This is really important. So what we have seen is that price come back here, retrace really high. It has come back and tried to take this level to the downside. Price not able to do that and rallied back up. This level is really key. So what is really important is that as long as this level is held, now it seems to be quite a way low, but when the price was reaching here, we were still mentioning that, okay, this is a really important level for the market to hold. for in order for it to move higher, and so far it has. And now what the market is actually doing is it is going and retesting the highs of this trading range. So it's just going and challenging the upper boundary of the trading range. So normally most of the breakouts, they actually fail. If there's going to be a breakout, I wouldn't be surprised that there's an attempt made at some point this year at the around $183 per share level, and the market might actually try to break out of it, and the breakout actually fails, and it moves back into the trading range and then make a move higher. So that is, the kind of the roadmap which could look at for the down the line. But what we are really looking at in terms of our shorter term target, 171 to $175 per share level over the course of next few weeks, perhaps. Again, we have to wait and see price action. So guys, this is the longer term monthly chart. Look, this is the lows of the week of 2nd of Jan 2019. So in fact it was around 31st of December 2018. And what the stock has done is it retraced 38.2% retracement of it. There are a number of other Fibonacci confluence levels which came around here, shown on the weekly chart just now. From a momentum perspective, look, the month of April took the highs of the March out, so it looks pretty good. Again, just from a structural perspective, here we go. If I just draw a line like this, that's the high of 1st of August 2022. Looks like the stock is just gonna go and challenge that, which comes around $176 per share level, which is in line with our ABCD pattern that we had a look at on the weekly chart. Okay, so let's move on to Microsoft. Wow, so the Microsoft stock has been a very interesting one. So we were actually watching for this pattern formation right here. We had resistance coming in, key Fibonacci retracements levels here, and then what happened is that the stock did have a sell-off. Earnings came out, and this is where the last video which we did, we mentioned that okay, we have to really watch the next day's trading price action, because if the price were to open with a gap down, then it would have been an island top formation, which is one of the more bearish kind of pattern. That did not happen, which is really good for the stock. In fact, what it has done is the price action on the 28th of April, excuse me, on the 27th of April was pretty strong, and it just broke out of to the out of the 61.8% Fibonacci retracement. So this is pretty good, and we had mentioned that this 618 could be a tough resistance. So far, probably not. So just gonna remove that. It doesn't mean that maybe next week it's a really key week where a number of really key economic announcements, including the interest rate decision, is coming out, that we might see some sort of retracement. But the next resistance level now we will begin to focus at is the 78.6% retracement coming at 320. So let's mention 320 as a question mark. Here we go. This pattern formation highlighted in the yellow, I'm gonna remove that because it failed, which is good for the bulls actually. So we remove that, just clean up the chart a little bit, remove that, and here we are also had a 1.618 expansion. I'm just gonna remove this one, clean up a little bit, and here, there we go. We might have some other expansions coming in. There we go. Here, boom. So this 316 to roughly about $320 per share level is what we will be watching over the course of next few trading days and weeks. Okay, let's take a look at this stock from a longer term weekly channel. So look, wow, last week was a rocket. And just from a structural perspective, it has taken out the highs of the 15th of August 2022, highs. That's pretty good. Now again, just from a structural perspective, looking at this region here, which is also around the 315 $316 per share level, just from a Fibonacci retracement perspective. Here we go. uh, yeah, it's just gonna go for the 78.6% Fibonacci retracement. So here the key thing that I would like to mention is, look, this is like a really long-term chart on a weekly basis. And here what the stock has actually done, when it came as low as the around $220 per share level, a little bit lower, about 213 $15 per share, it had just retraced the 38.2% of its 20 of its lows formed in March of 2009. So this is the really first key 38.2% retracement only, and also it was right at the 50% retracement of the 20 March 2020 COVID lows. So it's a very strong confluence level, the kind of stuff which we saw on the Apple chart. um, so here, in fact, the chart is pretty strong. We have these resistance levels which might act as a, some sort of a pullback from, but from a momentum perspective, it's really good, because look, this is the 200-day, excuse me, 200-week moving average. This is the, I believe this one is the 20, yeah, this one is the 20-week moving average, which is above the 200. So, from a momentum perspective, it's pretty good. Um, so how high it could go? It would go to 386, followed by um, 432. That's the 1.27 and 1.618 expansion. The Microsoft stock, and the kind of acquisitions they are doing with the Chat GPT and stuff, and integrating AI in their search, that's really good stuff. So let's move on to the monthly chart. Again, this is the key support we just discussed. On the weekly chart, which is 38.2% Fibonacci retracement from the 2009 lows, it broke out of this downward trending line here, and here we go. Well, I think around 316 to $320 per share level is going to be the next kind of key resistance level to watch. And yeah, I think it's going to go up from a momentum perspective really good. Looks pretty good. Stock looks good. Let's go back here and let's take a look at Tesla. So guys, Tesla, I'm not going to discuss in detail because I've done a video. I'm gonna put a link on that, and in fact, for the stock of Tesla, I did a special report in which we look at the daily, weekly, and the monthly chart. So I will encourage you to go and actually watch that video. So the next stock I think we should look at is Meta. So this Meta stock is really interesting because what it has done is, I think it's more clear on a weekly chart, but it has actually retraced all the way back to 78.6% Fibonacci retracement ever since the stock actually went public back in 2012, and all the all-time highs reached. And what we have seen is a really nice dramatic rally, which could be fueled by some short covering and also new buying coming in. And for a while we were watching this $200 per share level because there was a possibility that all it could be just a dead cat bounce. But the stock has been pretty strong and has actually been moving higher and higher, taking out the 38.2% Fibonacci retracement as a strong resistance. That situation is gone. So any pullback in the stock would be a nice opportunity to accumulate some of it. It looks like there's a big gap left that actually the price might be targeting right the 61.8% Fibonacci retracement coming here. Let's take a look at this on a longer term weekly chart. So look, there we go. Here we go. So this is the 78.6% Fibonacci retracement, boom, from 2012. And here what the stock has done is closed above the 38.2% Fibonacci retracement. And from a momentum perspective, what it is doing is the price is now above the 20-week moving average and also closed higher on 200-week moving average longer term. So that's good. So what I'm going to do is I'm going to remove this because the stock looks pretty good from a momentum perspective as well, and we are just going to watch the what do you say, the price action going forward in the stock. Let's take a look at this. Is here we go. This is the monthly chart, really long term, and here we go. This was when the IPO took place, the lows of for the stock in August of 2012, all-time highs reached, retracement 78.6% Fibonacci retracement to the tick. Went a little bit lower, but look at this dramatic fall. Now it's moving higher, and as long as this strong support remains at the 78.6% Fibonacci retracement, looks like this stock, the woes of the Meta, formerly known as Facebook, might be finally getting over. And this has been a fantastic, really impressive rally in this stock. So guys, this is what we are looking at. This is what we're watching. I am only going to cover these main stocks in this video. One thing I would like to mention before we close the video is that this is not just a weekend review, it's also the end of the month. And look how strong the month had closed for this stock for April, and it's been going up 1 month. This was also a close higher. Yes, it did. So second month, so 1, 2, 3, 4, 5, 6. For now, the stock has been rallying for 6 months. That's half a year. Whether from here onwards we begin to see the stock begin to consolidate a little bit, 6 months strong rally, it's quite possible the stock begins to go sideways, maybe pull back a little bit as we begin to enter the summer months. And normally from a broader perspective, usually the months from May till sometime in October, they are generally challenging, so we could see some sort of sideways to maybe a pullback happen in the stock. And the good thing is it took out these swings highs, so the stock looks pretty good now. So thank you very much for watching the video. If you like the way we do the analysis, we look at the key pattern formations using pattern recognition, Fibonacci retracements. We come up and forecast the levels, key support and resistance level to watch, and the targets. Then please do subscribe to the channel. And if you found the video of educational value, then please hit that bell icon button as well as that like button. That way you will know when the new videos are produced, and also that way you will know, I will know that people find the content good from an educational perspective, and it just encourages me to bring more videos out for you guys. So thank you very much. Good luck and good trading. Apologies the video being a little bit longer than expected for me, but we had quite a lot of material to cover because it's just not the end of the week, it's also the end of the month. Thank you very much guys. Good luck and good trading.